Attendees are in listen-only mode.
Hi everybody, once again welcome to this week's training session with AutoChartist. Very nice to see a full room once again. Our webinars have proved to be very popular. My name is Yvette, as you know, and I take care of all the customer communications at autochartist.com. Today James is going to be talking about how to fine-tune chart pattern searches with the clarity indicator. It's going to be a very informative session, so I'd ask you to please remain in your seats and take part in our polls and just have a fun session with us. Also, feel free to ask questions during the session. If we don't get to answer your question, please send us an email to techsupport@autochartist.com. So with that, I've got James on the other line, and if he's ready, please take it away.
Great, thank you, Yvette. Appreciate it. Okay, as Yvette said, we're going to talk about fine-tune your chart pattern searches with the clarity indicator. It's a very informative webinar because it deals with one of the quality indicators that AutoChartist has provided on the chart screen as well as the Fibonacci screen. So it should be part of your daily routine to use when you're making your pattern selection. But before we begin, we'll take care of some of the legal work here. I'll read the disclaimer. The AutoChartist service includes chart pattern identification in respect of foreign currencies, commodities, equities, and stocks. There are potential risks relating to investing and trading. You must be aware of such risks and familiarize yourself in regard to such risks and to seek independent advice relating thereto. You should not trade with money that you cannot afford to lose. The AutoChartist service and its content should not be construed as a solicitation to invest and or trade. You should seek independent advice in this regard. Past performance is not indicative of future performance. No representation is being made that any results discussed within the service and its related media content will be achieved. All opinions, news, research, analysis, prices, and other information is provided as general market commentary and not as investment advice. AutoChartist MDIO software, their members, shareholders, employees, agents, representatives, and resellers do not warrant the completeness, accuracy, or timeliness of the information supplied, and they shall not be liable for any loss or damages, consequential or otherwise, which may arise from the use or reliance of the AutoChartist service and its content. Great. With that being said, thank you for sitting through that disclaimer. Sometimes I feel like I'm reading a commercial for one of those medical ads that, at least here in the United States, sometimes the disclaimer is longer than the ad. So today we're going to talk about fine-tuning your chart pattern searches with the clarity indicator. As I said, we're going to cover definition of clarity. We're going to talk about, I'm going to show a lot of charts because this clarity has to deal with the aesthetics or the look of the chart. As traders, you know that you have the choice to be a number cruncher, like some of the algorithmic traders, and what that means is you can just take a group of data, run it through a computer, and have it spit out buys and sells for you. And as a chart watcher, you've made the decision to find programs like AutoChartist and work with the patterns that these programs have identified. And then from there, you establish your rules for entry and exit, or at least try to filter the types of patterns that you like. AutoChartist is not an auto trading system, but it's a very powerful search tool for the types of patterns that you like based on quality indicators, clarity, the initial trend, the uniformity of the pattern, and the size of the breakout. And what happens is when you look at AutoChartist, if we go down and look at a chart screen, you'll see that we have these quality indicators in here. Now overall quality here is the average of the initial trend, uniformity, clarity, and breakout. So when you're looking at this, what you'll notice is that when you work with initial trend tends to be paired with breakout. If you have low initial trend, you tend to have a low initial breakout. Those are covered at other webinars. If you have a high initial trend, you typically have a high breakout. So these two, the initial trend and the breakout, actually deal with the strength of the potential strength with initial trend and the actual strength with the breakout. These two indicators here, uniformity and clarity, actually deal more with what's going on between the support and resistance lines. Okay, uniformity is going to be a future webinar, and this week we're going to talk about clarity, and so that's going to cover what's going on in here. So just to recap what I said is the initial trend and the breakout tend to deal with what happens when the market crosses out of the pattern, and the uniformity and the clarity deal with what's happening inside the pattern. So I'll go back a slide there and I'll say that the clarity is defined as the level of noise in the price graph. More spiky price movements mean a low clarity score. So when you're dealing with noise, it's often referred to by traders because noise is really unavoidable because of the way the markets trade. There's movement up and down. Noise becomes a factor when you're trading and you're getting caught in choppy or whipsaw type markets. So also noise is a term that's often used and referred to when placing stops. People that use volatility stops, for example, such as the average true range or a Bollinger Band, they're always told to place your stop outside of the noise, meaning that there's going to be normal chop in the market. There's going to be a normal range, okay? And you've known from the last couple of weeks, you remember how the market went from low volatility or dull markets to rapid volatility or high volatility during the month of August. That tends to be the movement of volatility or noise. It tends to consolidate and not go anywhere for a while, and then all of a sudden it moves fairly quickly. And after it moves quickly, the market begins to contract again and volatility goes down. A lot of these patterns, I should say most of these patterns, and most of the success in trading is really determined by volatility and not necessarily the pattern itself or the price movement. You need to have volatility on breakout moves, otherwise the breakouts tend to fail. And so when you have, for example, a breakout of a triangle pattern, you want to see a trend or the market move in the direction it's chosen, but you also want to have it move fast. So I think as traders, we all want the market to move in our direction fairly quickly. So we're all looking for opportunities that will help us find areas where volatility is going to take place, and that's what clarity does. And we'll go through some of those patterns later. So the more noisy a market is, the less clear it is to you as a trader. It makes it very difficult to find an entry or an exit point. And so you want to find something that's appealing and something that you can recognize as a triangle or a wedge or a channel, that you want to be able to see it clearly. And there are a couple of things that come into play. Oftentimes they say that the markets are art, it's an art versus science. And what happens there is that that's probably true. And they also say that market trading is 10% mechanical and 90% mental. So when you're dealing with what a pattern should look like or how clear it should be, you're really dealing with that mental image that you have as to what a triangle should look like or what a channel should look like. And that's very important, because when you're looking at a pattern and you're trying to decide whether to risk money on it, you want to have some kind of comfort level that that market looks like you want it to look like. And what that does is it instills confidence, and it also provides clarity and helps you with your conviction. Throughout my career, I've worked with a lot of floor traders. So when I would get a phone call during the market hours, I'd be asked to provide instant analysis with clarity and conviction. That was the main theme from every trader. They wanted me to tell them where it's going to go and why, or sometimes just where it's going to go or whether they should get in or get out. and they wanted to hear it with clarity. They wanted to hear conviction in my voice, and it didn't matter if we were right or wrong. They just wanted to hear it in a particular way. And I think that when you look at a chart, you want to make sure you look at it and you see what you're expecting to see, such as this pattern on the screen right now. You want to see a clear channel. You want to see clearly defined tops and bottoms, and you don't want to have a lot of noise. Now, there are a couple of things that happen that you can do to control the level of noise in the market. Always remember that the shorter the time period, starting from a tick on a chart, going up to say a 1 minute, 2 minute, 5 minute, the shorter the time period, the greater the noise. The market is going to shift back and forth. The longer, as the market begins to move, say for example you start looking at a 240 minute, which is very popular with currencies, and you start to go to a daily pattern and then a weekly and monthly, it becomes very clear. I mean, one thing that I do is I create monthly charts personally and look at them, and I try to put them on a wall 10 feet away, and if I could, a lot of times you'll see that you can clearly see the trend, and then you knock yourself in the head saying, why did I not see this? Because you're looking at the daily all day, Jim, that's what I would say, or you're looking at the hourly too much, or you're looking at a small screen. So I try to create situations where I want to see a big trend. I want to know what the trend is, and that's what Clarity does, and that's what working with these bigger time periods does. So that's one tip when working with Clarity and AutoChartist is try to, if you're getting too many trades, if you're getting trades that are providing you with false breakouts or just something inconsistent with your methodology, then you may want to look at filtering to higher time frames, and I'll show you that as we move on to the live screen later. So you do have control over the time of the screen. The other thing that comes into play is the length. You can see here that AutoChartist defines the length. This is a clarity of 10. Okay, I just want to show you in this chart, and you can see it's got a clarity rating of 10. And the thing that will jump out when I show you the live screen and some future screens is that these 10 clarity ratings tend to pop up when you have this length set at least over 100. And it's very, very good, very key discovery that I made. So when you're working with a 15-minute chart, as I said, it's a low period, it's going to be choppy. The longer you look at the length, or the longer the length of this pattern inside this channel, the greater this clarity. Okay, it's because AutoChartist has been allowed to look at a lot of data in here, and it's been able to assess what the clarity rating is. Okay, so that's one thing that you want to look at. If you're going to use a 15-minute chart, make sure that your length is set high so that you can find patterns that are clear. And you can look at this and see that the relationship between this bottom and this top is very similar to this bottom and this top, and similar to this bottom and this top. That helps both clarity and uniformity, that there's some kind of price and time symmetry. So not only is the price movement pretty close to being the same, you see that, but also the distance between bottom to bottom in these cases, or bottom to top, or also top to top and bottom to bottom, they're all fairly clear. You can clearly see that this market has established resistance and support inside of this channel. So that's very important. Now it did break out here. It broke out here a little bit and hit an objective. It wasn't much of an objective, and then it went on its choppy formation. But as you can see that, as I said before, that the breakout, or the clarity and the uniformity, really don't have a lot to do with the breakout strength. This breakout strength was only 1, and this initial trend was 2. So it basically needed volatility to drive it higher. But the setup was there because the clarity and uniformity was there. It just so happened to fall at a time when the market had low volatility. And if you remember last week when this thing broke out, this chart's from August 25th is when it ended. If you remember last